Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea. And just a great set of conversations today. One of the high points was Stephen Kim came in from Evercore ISI on the American housing market. It was really informative, just as one of the moments today. Very, very big equity day, if you will. We started strong with Stephen Auth with Federated. Stephen Auth is just iconic, decades of experience here. And he does what the adults do, not the next month guess, the next year guess, but can they try to reach out to the might of the American economy to get to a 2-year view. Here, Auth of Federated Hermes.
We've got a 2-year target of 8,600. We've got 7,800 for next year, and really driven by earnings growth at this stage. Okay. We've got earnings at 390 out 3 years, and stocks eat nominal GDP growth. Nominal GDP growth looks really good to us. You've got the AI revolution driving earnings. You've got enormous productivity. We've got GDP next year up 3%. I think the consensus is 2%. We've been on the high side all along. We've been more right than wrong on that. But, you've got a lot of stimulus coming next year that we think could get you a surprise on the upside.
A lot of different opinions out there. It's Outlook time. I make a joke about it. Sam Rowe does a great job over at TK of looking at each and every Outlook. I'm sure I'll have a summary at some point. But I got to admit, the needle's tilted towards a more optimistic assessment right now. We shall see. We spoke with Dean Curnutt. He is definitive in the derivative space, the dynamics of options and futures, their leveraged nature, and all those Greek letters as well. Here, Dean Curnutt of Macro Risk Advisors on the linkage of the Standard & Poor's 500 to the VIX.
If we look at the S&P, its relationship with the VIX is as old as time. You can go back to the late 80s, the 90s, and so forth, and it's always stocks up, VIX down. That correlation is around negative 80%. But for the stocks themselves, so when the S&P rises, the VIX falls. But for single stocks, and it's not just meme stocks like GameStop, it could be Google, it could be Broadcom. The stocks are rising, and the market is assigning a higher implied volatility. Why? It's a great question, and it really, to me, reflects a unique component, which is the stocks are options. In other words, when the stock rises, the potential that it rises much more actually goes up as well.
Just a window into the dynamics of derivatives and the movements that you see in options. I have a general rule of an option being 4 times leveraged to the underlying stock. That's just a rough rule, but that's some of the game you can play with options. Dean Curnutt talking there about the advantages of hedging your guess instead of a pure play in options. On the podcast, we're on Apple, we're on Spotify, others as well, including YouTube podcasts. It's Single Best Idea.